Are you struggling to navigate the complex world of day trader tax status? Are you tired of the endless paperwork, 1,000 pages of documents, and super confusing IRS tax regulation? Well, if you are, you're probably not alone. So in this video, what we're gonna do is we're gonna talk about day trader tax status. Let's go. Hey, what's up everybody? Welcome back to the channel. So if you're new, my name is Brian Rivera, and really I'm just a tax strategist at heart that loves to help day traders, real estate investors, and business owners really level up to that next level. So if you're brand new, show your boy some love and hit that subscribe button. So we understand that the path to become a day trader is filled with intricate details and reporting requirements. So it's not completely about just your day trading skills, but it's also about navigating the nitty-gritty of your financial documentation and your trading habits. But here's the good news. We're gonna give you a quick refresher on how to actually document your day trader status and some of the tips and tricks that we actually use inside of our CPA firm. So why you should listen to me is my firm has actually helped thousands of traders with their tax reporting process over the last decade. And so I've actually gone to the point where we've used a development team to actually create a software called TraderFyles. And what TraderFyles does is it automates some of your capital gains reporting. So it helps you with the meticulous details such as producing a Form 8949, if you're non-mark-to-market trader, or a Form 4797 for all the guys that are mark-to-market traders. So with this software application, you're not getting any tool, you're actually getting a tool that's backed by years and years of data and experience. So now let's focus on the specific criteria that you need to meet each and every year to make sure that you qualify as a day trader in the eyes of the IRS. So if you recall from one of my prior videos, day trader status is really derived from IRS tax topic 429. And I'll link a video up here if you haven't seen it. And basically it outlines the criteria of what you actually need to achieve to maintain day trader status. And if you actually read through it, it doesn't actually make a whole lot of sense, especially if you're a non-tax person who doesn't understand that lingo. So in order to simplify it, what we had to do is we looked towards IRS court cases. So there's a lot of them out there: Holsinger versus Commissioner, Pope versus Commissioner, Endicott versus Commissioner. But basically in these IRS court cases, what happened is the IRS provides an opinion letter, and what we did is we took some of the qualities in the verbiage that they put in these opinion letters to create a day trader status template for our firm to follow, but also for our clients to follow. So what we've created is we've created an acronym that we use inside of our CPA firm to run traders through this test. And we call it the BEHAVE test. So we say a trader must behave to qualify as a trader. So the B stands for business expenses used in business, or they need to be reasonable and necessary. So that's things like trading subscriptions, commissions, stock locate fees, professional services, tax planning, tax strategy, your legal entity formations. There's a lot of stuff out there that you guys are going to incur to run this trade. The E stands for equipment used in business. So equipment are going to be things like you got a sit-stand desk, you got multiple monitors, you got backups, a lot of different bells and whistles that you need to run your day-to-day operation as a trader in securities. Now the H stands for hours in the market. So when you want to qualify as a trader, you want to make sure that you are spending at least 4 to 5 hours in the market. The A is going to stand for average holding period. So we want to make sure that your average holding period of positions that you have are less than 31 days. Now, if you have swing positions or core positions, that's okay. You can hold those. But on average, the IRS is looking for regularity and continuity. So by doing that, you want to make sure that you're turning those positions over in your trading account. The V stands for volume of trades. And you want to make sure that you have at least 720 trade executions. So that's on the buy side and on the sell side. So the E stands for the extent at which you trade. So the US equities market is open 252 market days for the year. So you need to trade placed on 75% of those market days. So 75% of 252 is 189 days. So you need one unique trade on at least 189 days to satisfy this criteria. Now, outside of the BEHAVE test, we also look at two other components. One is we look to see if the trader is over the pattern day trader rule. So you're over a $25,000 account equity. Now, this is not a distinguisher. However, this is just something that's further proving your case. Now, you can have multiple accounts. You can have options, cash accounts where you can trade every single day. So there is a way around it, but it's just something that we also look at. Now, the other thing that we look at is we look at your sales proceeds, because we want to make sure that you're turning significant volume. So if you're trading stocks, typically your sales proceeds are going to be in the millions. If you're trading options, sometimes it might be a little bit lower because the value of the contract is not the same as the individual equity. So to take it a little bit deeper, let's talk about the 720 trades. So in order to figure out how many trades you have, you're going to have to aggregate all of your trade data across all of your brokers. Now, if you're using a solution like TraderFyles to automate the capital gains reporting for yourself, when you upload your documentation, we'll actually tell you how many trades that you placed for the year. So that way, while you're creating your tax forms, you'll also know at the same exact time how many trades you actually placed. Now let's talk the requirement for 189 trading days. In my experience, this is probably the one that disqualifies most people, is because sometimes you're a trader, you want to go on vacation, you want to hang out with your friends, you want to do whatever you need to do, and you may not be always plugged into the market year round. So to get to 189 days, you can actually miss, I believe it's 61 days, or 63 days, in the market and still meet it. But a lot of times, how do you figure out if you traded 189 days? So what you would need to do is you would need to export your trade data, get all the dates filtered in a column, and then you want to remove duplicates. And then when you remove the duplicates, that'll tell you if you have one unique trade on one day. Again, if you're using technology, something like TraderFyles, when you upload your documentation, we'll actually tell you how many unique days you traded during the year. So that way there's not a guess. In my experience, the two biggest requirements where people either make it or break it is going to be number of trades and the number of unique days you traded in the market. So if you met those two, it's highly likely that you are on your way to qualify as an active day trader every single year. So when you're proving trader status, economic significance is very critical. So one of the easiest ways to prove that is your sales proceeds. So the way you look at your sales proceeds is basically going to be anytime you have a sale transaction. So whether you're selling an option, you're short selling a stock, or you're long a position and you're selling out of that position. When you make that sale, that's counted towards your sales proceeds. So when you count up all of your sales trades, that's going to tell you how much economic significance your trading had. And again, when you're looking for day trader status, you want to make sure that you're getting close to million plus if you're on the stock side. And obviously options, depending on your strategy, might be a little bit lower, but we need to see a lot of economic significance. Now, the last piece that we're going to review is, now that we've understand what day trader status is, how to report it, how to aggregate your data, now we're going to talk about the tax reporting side of it. So if you're a non-mark-to-market trader, the requirement for you is you actually have to report every single trade that you have on a Form 8949. Now, if you're using a software like TurboTax, for example, I've actually personally never used it, but what I do know is that they cap you at the number of trade transactions that you can put in there. And on top of that, nobody wants to sit there and key every single piece of trade data into their tax return. And so what happens is if you use a software solution such as TraderFyles, we will actually generate the Form 8949s for you and the Schedule D. What you'll do with that documentation is you're going to give that to your CPA or your tax pro to actually do it, or maybe they're using the software in their firm already, or there's an option to actually export your data to TurboTax. So if you're using TurboTax, I think it's online desktop, we have an integration where you can upload your files directly using our integration plugin. Now the second piece, maybe you're a mark-to-market trader. Now you have to report on 4797 and you have no idea how to report that. So this, in the same instance, if your data is tagged as a mark-to-market trader inside the solution, we'll also generate the Form 4797 for you to attach into your tax return. So we've got the entire piece covered for you should you go navigate this tax journey in day trader tax status. So in conclusion, qualifying as a trader involves looking at your entire picture over a 12-month period. So when you're looking at your trading data, you want to make sure you're looking at it in a 12-month period, and you want to grade yourself against those behave metrics. And to make this more efficient, you want to make sure you have a partner solution or something that's going to make your life a little bit more efficient. And you can use tools such as TraderFyles to help aid you and document your journey as a trader. So if you want to make your tax season much simpler in your path to day trader status, definitely check out TraderFyles and join the community of tons of day traders and CPA firms who leverage our tool to make tax season a success. I sincerely wish you guys the best of luck on your trading journey, and we'll catch you at the next video. Have a good one.